Hey, good morning, good morning, good morning, good morning, good morning. Hey, Tuesday. Let me remind you that trading's risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money cannot afford to lose. Hello, my name is Wayne McDonald. Nice to meet you. Huh? The mounts don't hold the weight. And they go, they're supposed to. The weight of the screens are way below spec. Feels so good to drill a bolt that long into your walls and then find out the mounts don't work. What are you going to do? So I got new mounts. So anyways, hey, welcome to the webinar. Make sure you do the likey thing, the little thumb up thing. Please leave a comment. And if you're new to these webinars, please subscribe. That way you get alerted when I start. It's pretty simple. Hey, I've been trading currencies a long time, and I'm here to share. So please get involved. Participation, please. Ask questions. I think the people that learn the most are the ones that ask questions during the webinars. So please take advantage of that. And then also, we must thank Traders Way for making this possible. Thank you very much, Traders Way, for allowing us to gather as a community. And then I say, hey, well, how can we pay this back? And of course, the answer to that is for you to visit tradersway.com and become a client. Think of it. They're trying to entice you to open an account at Traders Way by investing into you up front. I think that's really cool and shows the spirit and the heart behind the organization. So pick a broker that cares about you. Yeah, seriously, right, Michael? Thank you, TW. So, and thank you to you for the loyalty and respect that you show me every day, really. So thank you as well. So how's everybody feeling? I was in a piss poor mood yesterday. Yeah, because of the thing, because of the screens. Yeah, maybe. So what are you gonna do? Yeah, what are you gonna do? Anyways, hey, let's move on. Gee whiz, I guess I should have had glasses or something. Hang on, I can't see anything with this in my face. Do I even have glasses? Oh, I have glasses upstairs. Can we sit in the dark today? Is that all right? I don't know what's going on. Where in the world is everything? My whole office is ridiculously messy because of this failed project of mine. And yeah, I don't have glasses. Oh, check this out. All right, yeah. Put a bunch of those on your walls. See how you feel. So anyways, a little dark on the camera. I hope you don't mind. This is okay, isn't it? Huh? It's all right. I'm a little purple. The sun is just coming up over the lake. Everything should be fine soon. It's a little dark now. Oops. Sorry, wrong button. Go get your glasses. Yeah, well, I'll rely on you guys. How about that? All right, so there's our setup. Let's take a look. Let's start here. What is this? Euro dollar. So yesterday, euro dollar was going up. And we said, we should probably treat this as a range-bound market. It'll probably come up to this blue area and then head down. And then, of course, this is sort of the midpoint support and resistance level. So drag that across and finish that. And so how did we do there? We said this would be supportive and that would be resistances of... Seemed pretty accurate, right? So once again, if you were a bear, you would sell up here. And if you're a bull, you would buy down here. And and everybody else is in the middle. Jean-Guy, maybe you're getting old, buddy. Yeah, isn't that funny though? Like this bolt, going back to Jim, it's like, oh my God, the bolts. Yeah, you can't quite see this, but this bolt, right? And the monitors or the mounts have multiple bolts like that. So clearly that's going to hold a 12-pound screen, right? But then there's this, it comes out from the wall, it goes left and right, it tilts, it spins. So this little thing that actually goes on the back just can't hold the weight. Like I could probably stand on the mount. It's not that part of the weight. It's the little, so there's a little picture that says, oh, well, just tighten it. And they give you this little fake wrench, and it doesn't turn and it strips. Anyways. Yeah, Jean-Guy, it just sneaks up on you, right? Just sneaks up on you. Anyways, going over here, we had the same sort of idea. Do you remember? We said even if you're a bear, it probably needs to go up before we get bears involved. That's cool, right? That's predicting the future, isn't it? Probably needs to go up before it gets a proper sell. And again, that's just because this isn't real resistance. Okay, so now going into kind of, let me zoom in, I guess. Maybe even a 15-minute chart. What we need now to kind of confirm this, and you may have already missed it, but okay, you treat it like a standard range, right? And how do you trade a range? Breakout, pullback. You might have it this way. So all I can say is that's the one time I can guarantee you $1 million. I mean, just that the one thing. But let's, that's not the point of the webinar. So let's just keep that aside. Let's tuck it into a little box and bury it somewhere. And never speak of it again. But there you go. Right? So that's kind of, our hypotheses yesterday is it should come up from a lower price, come into this gray zone somewhere, and maybe roll over. Okay? In that case, did it do it? Okay? And what was important? What was this pivot important? 73.50, right? 73.50, that's it right there. Down, up, down, now up and down, down, down. Okay. What do you think? Did you miss it? Did you get it? What are you doing? Are you on it? And of course, if you're a bull, like, this better hold if you're a bull, right? Does that make sense? Yeah, cool. Oh, you got it. Sulev. Sulev. Right on. Sulev. A boy named Sulev. Cool. So it's not bearish. We got to get below that to make it officially bearish. But this is the price where you set the bearishness, right? And remember, you're supposed to be short like way up here. I mean, I guess the most conservative basic straight up entry would be in here. Because remember, yesterday we were talking about this being the resistance area, right? I mean, really, you could be in here. because this is confirmed that it's acting as resistance. So as a bear, you should feel good about that. Make sense? Neat, right? So what's your next move? Let's put it that way. What's your next move now? Well, if you're a bull, boy, oh boy, do you need this to hold, huh? Right? Like, holy smokes. And more likely, because you've breached the 21, more likely you're going to have to rely on the 55. So plan A for bulls would be on a smaller time frame, like a 5-minute or chart, right? You need this to go up, and this is your plan B if you're a bull, right? And there really isn't anything else for you, in the next, probably today, right? Now, what if you're a bear, huh? Next move is sort of down, up, down. Okay? It's probably going to find some support in this area, like I showed before, right? So, I mean, let's draw it maybe another way. Let's do this differently. So let's call it this, and then how about maybe it's more like down, 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 up, down, 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 up, right? Down, 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 that kind of thing. I'm a burr. Can we look at Aussie yen? Sure. Morning, Abel. What a great name, Abel. It's just a positive name, right? Like, hi, I'm Abel. Really? I need your help. My name is Willing. My name is Willing, and this is my brother Abel. Yeah. Okay. Let's go into here. Good morning. Is it Defet Doggo? Defet Doggo? I'm not saying it very well, but at least I'm trying. Okay, check that out. Can you see our trade plan from yesterday? I set this up very, very detailed. Remember? Boom. Okay. I didn't use fibs. I didn't use fibs, and I really don't prefer to use fibs. You can, whatever. So I have it set up as a role reversal. You can see this here. So the general strategy or plan, if you will, is this. Okay? That's what we had planned. That's what we had discussed. Is it close? Yeah, this is gold. Yes. Sorry, I changed the template, but okay. But yeah. Okay. So that's cool, right? So now in here, when you get up to this area, that's where you drop in out of an hour down into a 15-minute or a 5-minute chart. And you use technical analysis, right? And what are you looking for? Well, going into it on a 5-minute chart, let's say, you're going to have an uptrend. Up. So, right? And then at some point, it's going to do something not bearish, and then eventually something, sorry, it'll do something at first not bullish, and then eventually bearish. Okay. Well, if my processor is throwing out problems or something, just change the setting on your YouTube if it's blurry, and it fixes that. You can change the resolution so anyways. All right, so you see what I mean? So that's, now you have to confirm or deny the hypotheses. Remember, we did this after, I guess it was about here yesterday, right? So all we really did was recognize the lower low. So therefore, I do this whole thing. So now the hypothesis is somewhere in this area, which I did this for you yesterday. Somewhere in that area, we expect price to rise, and then you'd look to sell. So when do you sell? Well, that's what the 15-minute chart or a 5-minute chart is for. And then time of day really helps, right? London Open, well, Shanghai Open, right? London Open, New York Open are the big ones. And when I first started, Shanghai Open wasn't even on my radar. It was Tokyo Open. And my daily pivots I used to set based on the Tokyo Open. So I always said Tokyo Open is the beginning of a trading day. Now it's I don't drill down so much to the daily pivots, but that I'm just taking you through history here. Yeah. I thought it was broadcasting at the highest resolution, Michael. But I'll see. Maybe I changed something to ensure a better stream, but I'll mess around with it. All right, so let me go back to this now. So you can use time of day as a key indicator. But if you're looking for price action now, and let me turn that off, I guess. If you're looking for price action, where on this chart does it become bearish? Up, 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 down, down, 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 up, 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 down, 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 up, 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 right? So where's the entry if your trade plan that we created yesterday was up somewhere into here and then down the remainder of the day? Where's the actual entry? And I'd say, well, you got this is aggressive and this is obvious. Okay? And the difference between the two is really if you're on a 5-minute chart or a 15-minute chart. But like this to this is a lower low, no matter what. So therefore, you set up the lower high. Does that make sense? 1, 2, 3, tout le monde. Hey, if you're new to these webinars, please subscribe, join the family, get alerted tomorrow when I start the stream. Okay, so there's your gold. Gold! See, is it more obvious now? That's why I like my chart setup. I mean, that's pretty obvious, right? Ciao. And I'm free. Okay, how about this as far as day trading? Check that out. There's gold in them charts. Well, swing traders know how to do this, right? This is a daily swing or the basis of a day trade, okay? This is the sell zone, okay? And to give you an example, this is not a sell zone. This is not a sell zone. This is not a sell zone down here. That's the sell zone. So if you saw this, and remember, when we were here, we created this trade plan over there saying that we need a down and an up and a down, okay? So it all comes together, right? And so your day trade, right, this is your sell zone, and therefore, by definition, that's the target. And because DPP is the entry, then DS2 is the target. So your target is 1,276. Okay? It's not a bad day trade. No, Michael, I'm just confirming that people understand that based on pivot points. It's a technical indicator, right? This is not a sell zone. It has nothing to do with what price did, really. I mean, yes, because that's how pivots are created, but based on a strategy. That's what I'm talking about. The basic strategy, when you open up, like, let's say my book that I wrote 10 or 11 years ago, you look at it and it says, it says something basic, right? Like, this is not a sell zone. 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 Okay? What the book says is if you're a bear, you want to sell somewhere between this line and that line. Okay? You see what I mean? Like, that's it. That's the sell zone. Nothing else is a sell zone. So if you already had a trade plan that was based on this, and then you started the day and you get to your charts, you're like, oh, look, a sell zone. Pachow! You know, and this is also set up on the lower low, lower high scenario. Pachow! See what I mean? See ya, Robbie? So that's what I'm saying, Michael. Based on simple pivot point swing type day trading strategy, that entry predicts that bottom if you're a day trader. Now, it doesn't mean it's going there. It's just that's what the strategy is saying. Like, if this is your entry, which you would have wanted that anyways. Pivots aren't telling you to sell. Remember that, too. Pivots don't tell you to buy or sell. Based on your trade plan from earlier, you already wanted to sell at somewhere around here. And then you get the lower low. So now you're already thinking lower high. And then you get new pivots. And you're like, oh my gosh, look at this. This is so obvious. I'm going to get my lower high right in my daily sell zone. So therefore, you know, once it takes off your central pivot, you're like, oh, it looks like we're going to, right, DS2. If it went higher, it'd be daily M1. Okay? It just changes the target. But like, these pivots aren't telling you what to do. You are telling you what to do. And this just is technical analysis to guide you along what you wanted to do anyways. Okay? Remember, your technical analysis doesn't tell you what to do. Don't be fooled into thinking like, oh, well, I threw $1 billion onto the market because my MACD told me so. What? What? Your MACD makes decisions for you? Good thing your MACD didn't say jump out the window, huh? Okay, well, Michael, yeah, sure. Hey, Delbear. Yeah, Delbear, no worries, Delbear. You know, you're a guiding light in a world of darkness, Delbear. So no worries, huh? I'm looking at this and I'm like, oh, look at that stochastics. Well, I guess I got to jump out the window now. Like, whoa, get off the ledge. What are you doing? Like, my stochastics told me to. Your stochastics doesn't do anything. So funny. Anyways, cool. Yeah. How about WTI? Let's zoom in. We said up would predict a down somewhere around here, and then maybe it goes back up. Sweet. Nice. Take a closer look. Do that, and then drop into like 15. Okay. You know, again, not perfect, but, you know, I'm not teaching you perfect entries. I'm teaching you how to think. There's a difference, right? So when you're up here and you see the higher high, let me get this out of the way, WTI, guys. When you see the higher high and you believe you're in an uptrend, then you know there's likely to be a retracement and then a future extension. So where do you get back into the market if you happen to be a trend trader, for example? Well, I like to look left and I find, you know, what used to be resistance might come support. So I say somewhere around here, I should start looking for bullishness. Now, what time of day is also going to be very, very important. Okay, so you started the day a bull, right? Why? Because your MACD told you so? No. You saw a low, a higher high, and now your assumption based on, you know, price action is, I don't know, somewhere in here, right? Right? Like 100% is too much of a retracement, right? So basically you're saying somewhere between the 382 and the 618, you want to buy, right? Cool. That's all we know. That's a rough guide. So based on pivot point theory now, if you were a day trader, what's the buy zone? Okay. And going back to Michael's stuff, not here. That's not the buy zone. That's not the buy zone. This ain't the buy zone. That's not a buy zone. That's not a buy zone. That's not a buy zone. There's only one buy zone, and that's here. But the thing is, you already wanted to buy a retracement, right? Somewhere between, you know, like a 38 or 62% retracement from this high to that peak. Somewhere in there, you'd be very interested in buying. And it turns out that works out pretty well here. And then you use your new daily pivots, and holy smokes! Pachow. Hey, thank you for subbing. So now the next thing is, look, bulls are going to be challenged here. Okay? But bulls would like to try again here. Up, down, up. Okay? Are we going to break through here? There's no way to know. You see what I mean? There's no way to know. There's lots of things that are assuming the higher high, but remember, it can do anything it wants. We're just using this analysis to try to understand where we are and where we might be going. But the general plan here is because of this line, we're only going here. Then I look at this and I'm like, yeah, okay. So there's a lot going on in here. So I think the best a bull could hope for today would be, you know, not that it's going to come down, but that we're certainly going to be challenged here, right? But, these are all trade plans we did yesterday in this area, right? And they're coming through today. So remember, very often we're planning tomorrow or 12 hours from now. What's happening in the moment generally is less relevant, so to speak. Right? Alan Smoker, good morning. Into the 47 area. 47. Okay, well, you're saying, based on that, so whoever said that, who said the 47 area? I missed it. Oh, there we go. Guy wants it to come down to 47. All right, so you're a bear. Okay. You don't really have the lower low yet, Guy. You have a sort of a mild respect of resistance here. But it doesn't look like that's going to happen today, your retracement to 47. But maybe tomorrow, if we found ourselves in this situation, maybe tomorrow you would sell it here at 48.50, I guess it is. Or you get up into this resistance, right? You get it up near 50 bucks, and then you look for this. So I would say a drop to 48, a sell at 48.50. Right? But you got to get the drop to 48 first and then sell it at 48.50, or a rise up into 50 and take a shot, or a collapse and a resell at 49.50, which is, either sell it hard here or sell it there. Okay. Right. Well, it's got to get down there, right, Guy? So if you're hoping to buy it at 47, that's cool, but it still has to get to 47. So don't you think it would probably be a failed attempt to break 50 to take us back down to 47? And then, of course, you should overlap with some pivots and stuff too, right? But see, this is where I start first with my analysis, macro analysis first, which is a fundamental play. Then I use monthly and weekly pivots to set up the strategy. Then you can drop into a smaller time frame, use daily pivots and all that kind of stuff to move you, right? To move you along. Okay. And just sort of to let you know where we are, at the beginning of the month, this was a bullish buy area. That's where bulls would buy, and this is where bears would sell. So, and we have the higher high. So here's sort of the middle zone, and you can see bulls are currently winning this game, but they don't have to continue winning, right? So if it gets up into here, it certainly can come back down. But right now, the general move is up, okay? And now we're at 49.5, right? So we're up now. Well, I guess we were up yesterday that much too, right? 500 pennies. Right? Man, school's starting soon. It's creeping in. It's creeping into my psyche. Oh. Doing one class on quantitative analysis. So I've been studying up on it. I was watching another class, and the professor comes out and he says to the students, how many of you guys have completed a class on computer learning? And he goes like this. He's like, oh, About 1/3 of you. I'm like, oh shoot, am I supposed to know how to teach a computer to learn? Like, oh no, I didn't take a machine learning class yet. Oh my gosh, am I supposed to? So anyways, now I feel left behind. Look at the euro dollar and the Kiwi yen doing just like we planned yesterday. Just gorgeous. Gorgeous. Nice moves. Nice moves. Look at that. Just crazy. That's nice. That's nice. Gold digger goop, you're a genius. Nice. That's nice. Cool. Love it when a plan comes together, huh? Mr. Subscribe, thank you, Mr. Shabazz, Comet Gaming, thank you guys for subscribing. La 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 la. La 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 la. All right, so let's, oh, well, why don't we just open it up to comments, questions. Czar, yeah, I looked at Czar earlier. You know what I did want to comment on? Peso. Peso was delayed a week, but of course, so were banks and so were the markets, right? Look at some of these moves. Very nice. So remember the downtrend, right? Here's is that it right about here? Okay. Then you have to look for where is the Friday. So the first Friday of the month, not always non-farm payrolls, but whatever. Sometimes it's the last Friday of the month, but whenever payday is, this is supposed to head down. And then in January, you're supposed to look for the same thing. It's when people get paid. So there's just, okay. So in these areas, first Friday of the month is supposed to bring this down, first Friday of the month. And it's we haven't had a trend in this direction for a while, huh? So maybe that's a good thing for global macroeconomics. I'll try to remember to do that, Alan. Yeah, well, it comes down to payday, but also think about it this way, Michael. At the holiday time, right? It's a pretty logical human desire to send money home to your wife and kids or to your mom and dad or grandma and grandpa, right? Like the remittance trade is a human trade, right? You see what I mean? So it makes sense for it to move a little early. Right. So I want you to think of it that way. There's reasonings behind this. They're not dog and pony little tricks. They're not colors on a computer screen, right? There's a logic behind it. And the more you understand the reasoning, the better you're going to get this trade and potentially all trades. I mean, I keep trying to express that there's logic and reason behind all of these trades. It's not a video game. It's literally money moving from the United States to Mexico, or a business building a factory in Vietnam. Money needs to move, right? Money moves for a reason. So anyways, I just want to show that that's an interesting trend. Money's moving. That's moving quite nicely, in fact. Okay, cool. So somebody asked for the Swissies. Okay. Don't even miss her. Let me change it. Okay. What do you think? Do you remember when you didn't use monthly pivots? Remember those days? You're like, huh, wonder why it stopped there. That's weird. I just saw your comment, Chanel. Yeah, hey, glad to have you here. Wayne, how does the carry work on Mexican peso? I was short end of November. I'm short now. Well, yeah, generally, if you're short, you're going to earn. Are you saying you didn't earn carry? You probably have a mini account. Okay. So if you're not getting like full carries or you're getting negative carries when you believe you should be getting positive carries, generally that's because you have a not a demo account, a mini account, and you're trading such small lot sizes that, you know, a broker's got to make money somehow to pay for server expenses and maintenance expenses and licensing expenses and customer service expenses and compliance expenses, right? So for someone that's got like $5,000 in an account and is trading little tiny mini lots, you know, they're not generally trying to catch a carry because you're only making like 38 cents a week, right? So generally, that's not a strategy that it's generally not a strategy that small investors are looking for. They don't care about the 38 cents, like literally 3 cents a day compared to pips, right? So you might be, your trades are paying you $30 each, but if you only hold the trade over rollover, you can earn 3 cents. Wow, small traders don't care about that. Now, if you had $1 billion on it and rollover pays you maybe something more significant, and that's more like more part of what you're doing, right? Especially if you're not leveraged, right? You're not so, see, when you have $1 billion, you're not so concerned about leverage, right? Like, who wants 500 to 1 leverage? Somebody with no money. When you have lots of money and someone says, well, why don't you just jack up the risk? You'll become rich. The guy's like, this is $1 billion. I'm already rich. I'm Rick James, bitch. You just had to say. Anyways, like, I already got $1 billion. Like, I'm already rich. My concern isn't to get richer, because what am I going to do? Like 1 billion or 2 billion? What's the difference? My yacht's still over 100 meters long. Like, right? Like, so you're more concerned about being poor again. You're like, I ain't going back, blah, blah, right? So you're like, well, I want to park it somewhere and earn interest. You see what I mean? So going all the way back, if you're practicing carry trading, right, and you're buying something you're expecting for a high yield, and you're either getting a partial yield or no yield or a negative yield, you're probably on a small account. And 99.9% of traders are not looking to earn the 3 cents a day when they're earning 30 or 300 dollars a day trading their $5,000 account, jacked 501, of course. They're just not, right? So therefore, that's how that's, right? Yeah. So, but things will change, guys. Like I've told you so many times, and there's a video somewhere on, I think it's the FX Bootcamp YouTube channel. I remember the day though, because I bought a suit. It was supposed to be a travel suit, and I thought, oh, how cool is that? So I bought this suit that wasn't supposed to wrinkle, but it's supposed to be nice, and it was casual. It was sort of a tan colored. And I'm like, that's really cool, right? So I bought the suit, and I didn't have much time to do this presentation, but it was in New York City. I think at the time I was in California, and it was a Traders Expo. And I'm like, I don't really have time to do this, but I need to bang this out. It was a good thing. So I get on a plane, right? And I fly to New York City, and I get in the cab. This is way before Uber. And I get to the conference. I walk into the hotel. I walk into the room. I walk up on stage. 3, 2, 1, go! I do the presentation, right? And then it's over, and I shake everyone's hand, and it was all good, and I walk out, get back in the cab to the airport, on the next plane, and I flew back. Just like, didn't even stop for lunch. It was great. So I had this, and it looks like crap. It looks like crap. I never wore it again. But anyways, in that presentation, I remember talking about, like, the Kiwi yen. And I'm like, well, look, right now it's paying 8.75%. And, right, so I want to buy that, and I want to buy it leveraged. And I'm going to use that with a funding currency. So I'm going to take my US dollars. I'm going to use that as collateral. So I have an account with US dollars. But I'm not going to spend the US dollars. I'm going to use it as collateral. So I'll go to the Bank of Japan and say, hey, Bank of Japan, I got this cash over here in my US account in US dollars. I want to use that as collateral to borrow a boatload of Japanese yen. And they're like, yeah, sure, as much as you want. So I borrow a boatload of Japanese yen, but it costs me. They're charging me money, like any bank would. They're charging me, was it 0.25 or 0.5? I think it was as high as 0.5, 0.5%. So I borrow all that money, as much as I can get my hands on, and I have to pay 0.5%. And then I take all that yen and I stick it in a bank account now in New Zealand, and they're paying me 8.75. My carrying costs are 0.5, so I'm making 8.25% profit. Forget about pips and stuff, just the interest rate. But I'm leveraged 100 to 1, so I'm making 825% return on investment annually on my cash in the U.S. account, U.S. dollars, right? Because that was used as collateral, so I'm using this money. I got all this yen, right? But it's based on this collateral, my collateralized asset, right? And then I take that money that I borrowed and put it there, and I'm earning just on interest. And can you imagine, guys? Can you imagine that? Can you imagine 825% a year just in interest alone? Holy smokes. And that's why carry trading was so amazing. I remember probably 3 times I remember where the Bank of New Zealand, because the Kiwi was so overvalued, the Bank of New Zealand intervened. I remember at least 3 times over the course of probably 5 years, the Bank of New Zealand, the Reserve Bank of New Zealand, tried to intervene. And it worked for, I don't know, a few days, a week or something, but then it always goes back up. Just crazy, right? Yeah, Ed says billionaires want inflation protection, all that. But you know what? It's funny because I talk to billionaires actually often, and I was talking to one yesterday, in fact, and he was talking about a friend of his who has much more money than he does. It's funny, right? It's literal. I'm like, dude, once you hit $1 billion, like you got all the money in the world, right? No, he's talking about his friends that have like way more money than him, like ridiculous amounts of money. And he's like the poorest guy in the room, right? Which is weird, right? So anyways, he's like, oh, yeah, we're buying a refinery and all this kind of stuff. And I'm like, oh, well, great. That sounds really interesting. So, does your friend have financing? And he's like, no, he's a billionaire too. He just cut a check. And it's just funny. Like, it was just casual. It was casual. It was like, I don't know, buying art. No, that's probably not even a good example. I guess it's like someone buying a car. Right? Like someone buying a car, like, did you finance it? Did you take a loan? Is it leased? No. I paid cash for it. But in this case, this guy was buying an asset for 470 million euros or something. But he's like, no, you just paid cash. I'm like, no. Did you pay cash? Did you lease that Honda? No, I bought it. No, it's not a big deal. Just a Honda. So it's funny. So it's like billionaires want this and but a lot of billionaires aren't even not that sophisticated. I mean, they have people doing that stuff for them, but it's interesting. These guys are just regular Joes, and that's the interesting thing. So you might as well be rich, guys, because there's not a significant difference between let's say a well-educated poor person and a low-educated rich person, right? I don't know. They're not angels out of heaven or something. They're just average Joes with giant yachts. Oh, is that right, Michael? It's in the book. Yeah. So anyways, guys, these people need you. I want to go back to this just briefly. These people need you. The regular folks, they have very similar concerns to you, right? Now, they're not worried about their neighborhood and stuff, but, they're worried about their kids and, their wife's mad at them like yet again. They just want their wife to be happy. They want their kids to grow up and be good human beings, and then and other than that, they want their hobbies, right? Whatever that is. Now, their hobbies might be something exotic, but whatever. But everyone's just trying to be happy. So they're regular people with very similar concerns as you and I and them, right? And no matter what, if you have $1 billion and someone else has 100 billion, and you're like, well, so. These people are just regular people, and they're going to need your help. That's kind of the mentality. Like, it's not a pie in the sky thing. These are real people with real concerns. They have a lot of money. They certainly don't want to lose it, but they don't necessarily need more either, right? Have you gone through, like, I had a Barron's, I was smoking a cigar this weekend. Do I have it here? No, I threw it away. I was reading Barron's. Now, remember, Barron's magazine, I don't read it for, well, there's no real, like, articles like the Wall Street Journal. The stuff I read is, like fund manager performance, and very often they interview a fund manager, and they talk about their firm, their type, their investment process, and all that kind of stuff. But anyways, if you go through that, you know what it was? It was some sort of fund performance quarterly analysis that they had in here, and they broke it down into sectors and stuff. And they're talking about year over year, right? Where, sort of like if you had $1 billion, where could you put it? And you could put it in a fund that trades only this, and you could put it in a fund that only trades that kind of stuff, right? Broken down in category. And what they're showing is like year to date, or let's say 2018, negative 5%, negative 10%. 2017, plus 5%. 2016 plus 9%. Like this is for the year, guys. And I'm telling you, be ultra conservative and only try to make 2% a month. Shoot, when you're talking to these guys, 2% a year, if you never lose money, is probably above average. But 5% a year, they're like, that's really good. 10% a year, oh, wow, that's fantastic. Dude, I'm telling you to do 2%, right? 5% a month, you basically double your account. You see, like, where I'm trying to get you to think? If you're doing 2% a month, it's so much leverage and such high returns for someone with significant amounts of money. It's almost unbelievable that you can do 2% a month. And you're right, and you were used to be trying to make, 20% a month, 100% a month. Well, 2% a month for someone with significant amounts of money is almost unbelievable. And they'll look at it and they'll say, ooh, wow, you must be doing something risky or crazy or something ridiculous or very lucky, and you're gonna be unlucky in the future. And if you can make 50% a year, you're probably gonna lose 50% some year. You see what I mean? You see what I mean? Yeah, they're not going to pay you $20 million a month, right, Michael? But what I'm saying to you is, if you want to get there one day, and I hope you do, because I'm telling you, these folks need you. You're doing society a favor by helping a billionaire stay a billionaire. Because God forbid, how is a billionaire supposed to live on only $100 million? You see what I mean? You're like, I would have to sell my yacht. I will have to stop. I'll have to give up my board seats at the museum, right? Like, my friends are gonna laugh at me, right? Like, you don't want that, right? So they need you. So if you want to get there where you're managing wealthy people's money, and of course you're going to get paid very handsomely for that, because that's their worst fear, right? They don't fear death. They fear poverty. So you come in and you're like, I'm very conservative. I'm very disciplined. I'm very active. I will monitor your wealth day and night and ensure you never go poor. And we have enough positive cash flow that if you're going to go to Monaco, just blow a whole bunch of money, drop a couple of million on a vacation, and buy another beach house and stuff, yeah, it's all good. It's all good. Don't worry about it, right? That's what they need you for. So if you want to get there, I'm trying to train you now. I'm trying to train you now to be that person that can manage a billionaire's portfolio, which means you got to pull down the risk. But most importantly, it's this. You need to have the mental fortitude, the heart of it that drives you there, right? That it's not about getting rich quick. It's not. People don't get rich quick. I don't know why those commercials work. These people are on YouTube, right? Getting rich quick, making fast, easy money. Dude, that is such a dream, right? It's such a dream. I don't understand, like, who believes that? Somebody that knows nothing, I think, like, because if you understand how money works, not even money, how does the world work? How does humanity work? People don't get rich quick. That's not, you get rich slowly over time with hard work and intelligence, right? Right? So I'm trying to get you there to the idea that this is a real skill. This is a real job. There's a real market out there. There's real people. And they're going to take you through a process of decision making. And they want to see that you're very, very steady, very, very conservative. And that if they give you money, you're not going to lose it. And over time, you're going to grow it. And it doesn't have to be fast. It doesn't have to be huge. They have to be able to count on it. You have to be able to calculate it, right? So like if you're buying real estate, so you're a billionaire and you're going to buy a $100 million property. It's a skyscraper. It's got a bunch of tenants in it. Up top, there's some retail mall at the bottom. Basically you're buying Trump Tower. Great. So you're going to buy it for $100 million. How did you come up with the $100 million? Oh, well, you look at it and you're like, okay, well, what's all the income stream? Like all the tenants, what are they paying you in income? And then down here in the mall, what kind of cash is that generating? So you got all that in there. And then what are the expenses, the insurance and the electrical and this and that, and then you put it up there, and there's there's your net operating income, right? And then you do that over the price, and then you get a cap rate, and and you're just doing the math, and it all just makes sense. So if I buy this building, I can expect to earn this kind of income from the tenants, and I can expect this kind of expense rate, and my revenue minus my expenses get my net operating income. And then if I have financing and stuff, I can then play around with those costs and stuff. But the bottom line is, with that occupancy rate, with those rent levels, I will get this amount of money, pay my expenses, and at the end of the day, I have this much left. So that's how somebody invests. And they're like, I'll buy that income stream. That's what they're buying. They're not buying real estate. They're buying an income stream. Now, what are the risks? Well, the value of the property could fall because of a real estate decline, systemic real estate decline. Or maybe the neighborhood declines. Or maybe the city declines, right? Or maybe your costs go up, insurance goes up. And if you're financing it, maybe you have to roll over your financing into a higher rate, and that's going to eat into your income and leave you with less, right? So your cash pullout is lower, whatever. All these things can change, but you can calculate that, right? So they can calculate it, come up with a value and a price and all that kind of stuff. And it's a good deal or it's not a good deal. When someone with that kind of money comes along to you and you're like, hey, give me $100 million. And you're like, well, I was thinking about buying this skyscraper in New York City for $100 million. And I've done my calculations and I know I'm going to earn, it's a cap rate of 6, so I'm going to earn 6% a year. And then at some point over the course of, 15 years, let's say, about 15 or 18 years, that I'll own the building free and clear if I was financing it, right? And the tenants bought it for me. Great. So what do you have to offer, Mr. Forex Trader? And you're like, well, I do a lot of gambling. I don't really like doing research. I don't know what I'm going to do tomorrow. And my results are all over the place. And the billionaire says, that's tempting. But I can also buy this building that I can see and touch and go visit. And I can count on rent coming in every month. And I know what my expenses are. They're generally fixed. You know what? I might actually go with the building. I'm sorry. Right? I'm sorry, brother. So it would be better if you looked at your trading like you're competing against the net operating income of a real estate project. And if someone invests there's risk associated with that, but they're going to get their 5 or 6 or 7%, and they own the building. See what I mean? How do you compete with that? Well, first of all, you don't need 100 million because you can use leverage. So you say, well, you know what? With 10 to 1 leverage, you only need to invest 10 million. That sounds really good, right? With 100 to 1 leverage, you only have to invest 1 million. And now your $1 million investment into me should be able to compete with the $100 million investment over there. So you just by definition, you're only facing a small fraction of the risk. Oh, and I believe if you look at my track record, based on my longer term trades, my macro point of view and all that kind of stuff, I think I can conservatively beat your 6% per year. What? Right? 1% a month would destroy that. You see what I mean? You would destroy it. Just $1 million, just 1% a month on behalf of your client. And they all of a sudden they have you have their focus now. And maybe you do that for 1 or 2 years, and you're out on the yacht now with your client. And he's like, you know what? I like you, man. This Forex stuff is going good. I've been busy doing this and busy doing that, but you are so steady. I really like that. I think I'm going to bump your stack here. Why piss around with $1 million? Here's 10. Here's 25. Okay? So, Pharaoh says, I make 6% a month. Yeah, you're on the precipice of too much. So here's what I do for you, Pharaoh, what I would recommend. Slow down the growth of your lot size relative to your account size. And right? So as your account is growing, don't match it 1-for-1 with lot size. So let's say you're trading a standard lot and you doubled your account. Don't go to 2 standard lots. Do it so like you're only growing at half that rate. So you double your account, but you're only trading 1.5 lots. And then you double it again. You're not at 3 lots, you're only at 2 lots. You see what I mean? And you'll still be growing your account cash-wise and probably more than enough to pay your bills, but your actually per trade risk gets lower. It's Eastern Time, Nintendo, so make sure you subscribe because when I start this, you're supposed to be alerted. Make sure that little ringy bell thing, okay? Yeah, so even that, Pharaoh, I used to have a rule, 1 mini lot per 100,000 in cash. And you're like, what? Well, okay, right on, Nintendo. So Emil says 10% of account. Yeah, see, even that. Talk to a billionaire and say, you know what? I had a bad week. I lost $100 million. Dude, nobody on this planet, no matter how much money you have, likes to hear those words. I lost $100 million, right? Oh, well, still, Pharaoh, it's not the track record I'm concerned with. It's just over time, I want you to lower your risk. You still make enough income, but what happens? So, okay, let me go from a different angle. I've done this mathematically. If you lower your lot size, okay, your per risk, right? See, the other way of doing it, so there's that, the risk side. But there's the other part that I play with is the amount you pay yourself. Yeah, well, right? Yeah. The secret to making more money is paying yourself less. The number one goal for everybody here, okay, whether you're trading your own money or you want to trade other people's money one day, the number one goal is growing your assets under management. AUM. That's the most important thing. So one way you can do that, obviously, is at the end of the month when you pay yourself 20% and take the other 80% and put it in your trading account. Right? Well, right? Michael says, what if your girls need new shoes? Tell them to wait till the end of the year. Because the funny thing is, guys, it's amazing. The less you pay yourself, the more money you're going to make. And if you cannot pay yourself for an entire year and just keep growing your assets under management because all the money you make stays in your account, then in year 2, you're going to make 10 times more money than you would have otherwise. And if you can go 2 years without paying yourself, you would have made another 10 times the 10 times than you would have made. Like, it's exponential growth. And it very quickly adds up. So let's say you used to pay yourself 50% of your profit. Some of you guys are probably taking even more of that out of your account, which is a very big no-no. But let's say right now you have a rule where if you made $10,000 profit this month, $5,000 goes to your trading account, $5,000 goes to paying your bills and staying alive and buying your girlfriend shoes, right? But if you can lower that, let's say 25% you pay yourself, so now your salary goes down, your distribution goes down by half, and 75% of all your profits go back to your account to grow your AUM. You're like, oh man, that's going to really crunch my style. But by the end of the year, you'll be probably making twice as much money. So it's only painful for a year. So at the end of a year, let's say instead of making $10,000 profit, let's say you're making closer to $20,000 profit, right? Which means now you're paying yourself your $5,000 again to pay your bills, but now you're putting way more in your account for trading in the future. And then at the end of year 2, you might be paying yourself $10,000 a month, which is now double your income. But remember, the other 75%, like your account is growing like unbelievable. And all you have to do to get to that, that level is go through the pain in the beginning, pay yourself the least amount possible. And in year 3, year 4, year 5, your risk will be low because, again, you're growing your trading account exponentially, and you're lowering your lot size, and you're paying yourself enough money to get by, probably more than you were originally, right? But so to reverse engineer this stuff, if you don't do that, what happens is if you're only paying yourself, let's say you're $5,000 a month, at the end of the year, you're making $6,000 a month, and at the end of year 2, you're making $8,000 a month, right? But if you paid your less, instead of making $8,000 a month in year 3, you're making $30,000 because your account is like 20 times larger. It's compound interest, right? Remember how I opened my book? Not only is there Art of War quotes and stuff, but Einstein in I quote him in one of the chapters. Einstein did a press conference, and a reporter asked Einstein if Einstein could explain what the most powerful force in the universe is. And Einstein leans forward and says, compound interest. That, my friend, is the secret to success. Growing your assets under management. Now, if you're like, well, Wayne, I'm only starting with $1,000, so, it's going to take me 10 years. I'll say, well, yeah, it's going to take you 10 years, but then you'll be more than happy at the end of 10 years. Well, the other way to grow your assets under management is, friends, families, and fools, and then you get your track record, and you develop that, so you trade your friends, family, and fool money for 3 years, and you do it very well, and now you have this track record of success, and then more sophisticated investors come in, and maybe you do this and do that, but you grow your assets under management by managing other people's money. Okay? So anyways, I don't know how we got onto that, but very key important stuff. Remember, I'm trying to make you a success, not just teach you how to trade a 5-8 cross down, right? All right, we had, there was Swissy stuff. I only did one. Okay. So these are dailies, right? So do you remember we talked about these are dailies. This is the sell zone. This is the sell zone. Well, it's all the same thing though, right? Carry trades to compound interest. That is interrelated. But I'm trying to get most of you guys off of video game type trading. That get rich quick stuff it's not, it doesn't work. It's so silly that I find it hard to believe that people believe it. And even the people that seem to be into it probably don't actually believe it. But they need a dream or something. But nothing beats, intelligence, hard work, discipline, and a long-term plan, right? A true strategy, not just strategy for trading, but a strategy for your trading business. Like, there is no get rich quick. There isn't. Doesn't exist. Oh, well, my friend bought Bitcoin. So one of the things I've been watching is like Euro. Remember, one of the things we've been wondering, or I've been wondering, is at some point does Europe become an interesting investment? Because, like, talking about real estate and cap rates and stuff, those, when you're analyzing a business to buy or invest in, price obviously matters, right? So once you analyze an income stream, because that's what finance is, right? Finance now is just simply the valuation of cash flows. So if you buy real estate, when you buy a house and live in it, there's no income stream, right? You could rent it out. Now there's an income stream. But commercial real estate, you're not actually buying a building. A lot of people don't even care. You're buying future cash flows. You're giving up a pile of cash today, but you're accessing a cash flow over time, maybe in forever, in perpetuity, right? So at some point, it comes down to, okay, you have this income stream, but how much do you have to pay for the income stream? Well, Europe might be a lower price, okay? So at some point, that might be very interesting for large investors and institutional investors and all that kind of stuff. But I don't see it in here. Not quite yet, but we're looking for it, right? Keeping an eye open for it. Right now, Euro is weak versus Aussie. Euro is weakish versus Kiwi, although that's a sell zone. Euro is weak versus CAD, and Euro is weak versus Swissy. Look at this one, though. So Kiwi is quite weak. If Kiwi can get its act together, that might be a role reversal. What? I think I did gold already. Oh, right on. Says Wayne, I love when you talk in reference to the behind-the-scenes trading mechanism. That mini lecture you just gave is why I keep watching. Yeah, well, cool, right? I think that type of insight, what I'm trying to do is explain how the market works. Just simply that's it, like why it's moving, why it's not moving. Yes, by the way, guys, the template, if you want my chart templates, my indicators, my EAs, my profiles, like all these right? All these profiles have probably 5 charts or more each. So there's probably 100 charts here. My template files, my indicators, my pivot points, all that kind of stuff. If you want them, the download link is in the video description on YouTube. And it's free. You don't have to buy anything. Okay. So what is this little gray area that I've highlighted? This is where we were. I said this is the better sell. Right? 125. the zone of 125. Remember that yesterday? I said this could fall, but we're in a meaningless area. The better area for selling is up here. So on a smaller time frame, you're supposed to be looking for reversal patterns. Okay. The next part of this might be a lower low, lower high. Okay. You're already with Trader's Way? Right on. Take care, pal. Jim's already in it to win it. I wonder if you got this, Jim, or if you took this one. I'm guessing you took this one. I think you're in it there at 124.70. Oh, Aussie Swissy? Sure. Hang on. My mouse disappeared. There we go. $68. Nice, Jim. See? Aussie Swissy. I never finished this one. I just look at it. We're at resistance, so you can't buy it, and you can plausibly sell it, right? So it's either going to fall here or it's going to fall here. You can't buy it. So plan A is to sell that. Plan B is to sell that. Okay? Good enough? Got that, Mike? Cool. Well, I got to go. I'm expecting a large delivery and a giant truck and 3 men with tools. Oh, they should be arriving soon. Oh, I sound like a Wookiee. All right, I got to go, guys. I'm tired. I'm spent. Peace on earth. May the pips be with you. May our profits be above average. Thank you for being a client of Trader's Way. And please subscribe. Please click the thumbs up button. And please, please, please leave comments on the recordings. Open an account at Trader's Way. And if you need my chart templates, it's a free download. Compliments of the firm. Thank you for the respect, kindness, courtesy, support, motivation that you provide me every day. I really appreciate you in my life. So really, thank you very much again for everything that you do. And I will see you tomorrow and the next day and the next day and the next day, right? Take care.